Let's do it. And so there it is. So, anyways, all right. So, real quick. So, what I was talking about earlier with you, and you kind of mentioned wait for 6 months. We were talking about the investment thing, right? So, you're really thinking that properties are gonna drop in the next 6 months, pretty good.
I don't know that they're going to drop pretty good. I think they're going to drop. We're entering into the latter part of the year, so you're entering into the third quarter, you're entering into the fourth quarter, where typically sales tend to drop, listings tend to drop. I mean, you get into the holiday season, and they don't want people stomping around their pads when they're having Thanksgiving or Christmas time. No.
And I was like,
Yeah.
Hi, how are your houses for sale?
Get out of here.
Hey, you're here for pre-foreclosure.
Get out
of here.
Get out.
Man, yeah.
So, I think that's going to be part of the marketing of the market where you're going to see that drop.
Okay.
If these rates continue to flow up, the buyers are not going to be able to afford this stuff, man. I mean, you're already at 5.75 now.
Depends, yeah. It's gone up and down, right? It's moving around.
So 5.75 at 500,000. Looking at almost $4,000, maybe a little bit more than $4,000 PITI.
Right.
I mean, that's a big chunk, dude.
Right.
Who makes $4,000 just for the house? Not a lot of people.
Yeah, not a lot of people, but there are people out there qualified. That's why we're starting to see a lot of these where people are joining forces, right? And they're all moving in together into one house. The plan is that later on we'll be able to refinance and get out of it, and you could buy yours, and one of us will keep this one. So that's the plan.
That's the plan.
Right. But is it going to happen like that?
So, back to the market conditions, then you're going to enter January. Then you're going to enter tax time.
Right.
So, typically the market doesn't shift, in my experience at 36 years, doesn't shift.
So you're pretty new.
Oh, yeah, I'm pretty new. So typically it doesn't get hot again, or the trend is that come March, April, May, it starts to pop a little bit more. More houses come on the market. Hopefully interest rates can stay stable.
Right.
And that's what typically I see every year. And even in a more of a declining market, I think it's still gonna be the case between the last four quarter and the first quarter of 2023.
Now, everybody's expecting the market to crash like it did 2007. For those people that were around in 2007, 2008, it seems like they understand how the market crashed because of bad loans. There was bad things happening. Not everybody qualified the way they were supposed to be qualified.
Right.
But ever since that crash, up until today, a lot of people have gained a lot of equity, and that's why, I think 2020, 2021, we've seen so many sales, because instead of foreclosing during the pandemic, people weren't working. Instead of closing and saying, man, if foreclosed, I don't have no work, I can't make the payment, they sold because they were like, I'm not gonna leave $100,000 on the table.
Right.
I'm not gonna leave no money. Are you crazy? Boy, Christmas is coming. I got free money from the president. I got everybody. No, so I think that because of that, we're not gonna see the market crash as hard as we did in 2007. But that's my opinion. I don't know. I might be bald and look like a genie, but trust me, I ain't got none of that.
No, bro. We're not gonna see that. We're not gonna see that crash.
Right?
That crash was something fierce and something that came at us, kind of unexpected. But these banks, they knew they were going down.
Yeah, nothing's unexpected in the bank world.
And they couldn't get rid of their stuff fast enough for the government to say, you are upside down, clap, close their doors.
Right.
But it happened. Look at Countrywide, clap. They're one of the biggest, hugest lending institutes.
World Savings, a big portfolio lender, right? They went under big time.
Bam.
They were the king of the neg-am program.
Yeah, they were. So no, I don't think we're going to crash like that. I think it's just going to level itself and go down a little bit, and then come January of 2023, I think we'll see an uptake. Depending upon no catastrophes, stuff like that.
Yeah.
But when I say that, God, I retract that, because COVID
right, that was bad.
COVID was like...
That was worldwide.
What?
Worldwide, bro. Worldwide.
But COVID just, boom, our pricing went skyrocket, dude. Skyrocket.
Man,
it is because these people have money from the government.
Dude, I don't know what it was, but even the cars. Look at the car prices. Everybody was selling their cars 20% over sticker price. Right now we're seeing cars that are selling, 50, 60. Actually, my son sent me a thing today that this particular car, the Corvettes, are 90,000 over MSRP. That is ridiculous, man. That is like, wow. And people are still paying it. That's the thing, because then they're saying this is what you're gonna pay, but you still have to wait 6 months because we don't have enough in production.
Right.
You know what I mean?
Right,
so it's like,
yeah.
damn, how does that work out? You know, I just saw the other day too that YouTube and a whole bunch of companies that are doing the stay at home and work for me, thing, were just laying people off. They just laid off like over 1 million people worldwide. So we're gonna start seeing a little bit of that too, I think. But let's see what happens. I mean.
Yeah, dude. Let's just look. Tighten your belt. Mm-hmm. Tighten up your belt. Close your purse, ladies. Close your purse.
Wait, I got a man purse.
you better close that bad boy up for a little bit. Not pack so many dollars in there. And it's just sitting and stack your chips and stack your chips in your purse and put them on the sidelines.
Yeah.
Because there's going to be opportunities for you to pick up property.
Right.
And then once those opportunities come, jump on them. Don't be afraid. Don't be afeared.
Right. Well, the biggest problem I see people having, bro, honestly, is I was asking you yesterday, because I have a client who they're on the fence, man. They want to sell because they want to upgrade to a bigger house, but they're scared about the taxes. They're scared about their pay. They make enough money. They have everything well, but they're comfortable in that low payment, right? So now you got people that are going, man, what am I going to do? I mean, I don't want to move forward. The very popular saying right now, but we've been saying it for years, is marry the house, not the interest rate, right? That's been the saying forever. Like, you're going to have the same house, but even right now, when we were in the low or the high 2s and 3 interest rates, a year later, we're seeing those same people refinancing for whatever reason, and they're getting out of that low interest rate that they fought for so much. Mm-hmm. Now they're jumping out of it because, things happen in life. Yeah. You know what? I need this money because something happened, and now I have to build in the back of the house. My son had an emergency. I got clients calling me for all kind of stuff, telling me what's going on, and they're having to refinance to get out of that low interest rate. So at the end of the day, it's like, if you're gonna buy when you're ready and buy what you can. You know what I mean? I mean, the market's always gonna be moving.
Yeah. I agree with you. If you're in a spot where you want to buy and you're tired of renting, and look at rents. Mm-hmm. Look at rents.
So you have to have better credit scores to rent than to buy a house. I mean, how does that make sense, people? It doesn't make sense. You shouldn't be renting. You should be buying.
I mean, people are paying a ridiculous amount of rent, $3,500 for rent.
That's like the norm right now too. And right now the norm is between $2,950 and $3,600.
Dude,
that's kind of like the norm.
That's a lot of rent money.
That's a lot, man. That's a lot.
So I mean, you got these people that are sitting there renting at these high prices when they should be buying and staying around that price to own your own house and reduce and grow equity.
Yeah.
So I would say, if I was a realtor, I'd say, let's just buy it out. If you're ready and you got the money, let's just do it. Let's just go in there and plunge in and get the house. Because you're paying $3,500 a month. What's another $300 for a mortgage payment? It's nothing.
It's crazy though, but people really, honestly, man, the people that are not making a move, they're making a move to rent an apartment, are not thinking about making the move right now. They're thinking the market's going to crash, and if they weren't around back then, some of them were around and they were 13, 15 years old, right?
Yeah.
But then you got some, which are today, they're in their 30s already and they're looking to buy. Uh-huh. And then you got those people that were around back then, and they're telling the youngsters, wait, the market's going to crash, it's going to take a major dip, and then you should buy. Well, that doesn't make any sense, though, because first of all, no one really knows if the market's going to crash that hard. I don't think so, based on numbers, of course.
Right.
I can't predict what's going to happen. I mean, all we need now, is Russia to come attack us, and then everything goes to crap, and then what, right? Yeah. But knock on wood, that doesn't happen. But it's very hard to try to predict where the market's going to be as far as how far it's going to go down.
Yeah. You can't predict how far it's going to go down, but you can, there's going to be an opportunity for you to see an opportunity where it might go down a little bit for you to be able to find that nice house that you kind of saw, but you're kind of afraid to buy it, and it's still on the market, and let's just do it. Yeah, do it. Go for it.
Right.
Jump in. And just and make the payments and take advantage of it. I mean, if you've got the money and you've got good credit and you're ready to jump into a home, I'd say go for it.
Yeah.
I'd tell my client, let's just go. Let's do it. because you love the home. It fits you.
Right.
Your wife loves the kitchen.
Besides, I don't care what you think. It's what does your wife
think.
Right? Your wife likes it, we're buying.
And it has 2.5 baths. Because you know that extra bath down to the bottom. Because that's where I would be going. Instead of...
I always kick you out of the big bathroom.
Then,
you always get kicked out.
And then the women, they take over to the bathroom.
All the time.
Makeup, y todo, hairspray, and combs and brushes and... it's like, damn, man, where's my shaving cream, babe?
I put it in the laundry room. It's in the laundry room. I put it over there for you. You're like, wow.
Yeah,
here I go. That's what happens, bro.
Yeah,
we get kicked out all the time. We pay the bills, and then we get kicked out.
And then we get kicked out.
How does that make sense?
Hey, man, you love her.
It's called love, exactly.
It's called love.
Exactly what I was going to say. It's called love. I got clients telling me, well, you know what? That houses that I liked around the corner, they are now $700,000. And I'm going, yeah, but when you were looking a couple years ago, they were $500. And now they're $7. And in about another 2-3 years, they might be $9, right? Because I haven't seen the market. I got into this business in 2005. Since 2005, we had the major crash, which was 2007.
Right.
Everything dropped. But now, since then, I haven't seen anything go back to less than what it was back then. So back then, 2005, houses were averaging, I still remember some of the houses were like between 350, 390, okay, in some areas, right? So let's talk about a nearby area here, Pomona. So we got Pomona. Pomona in 2005, we were doing a lot of loans out there, and the houses were going about that. Yeah, they were between 375, 410.
That high in 2005, wow.
Yeah, and then the market crashed.
Oh, okay, yeah.
Right? Yeah. The market crashed, everything dropped. Yeah. No, the market crashed, the houses dropped to like 240, 260, right? Like 50, California was at 50% off, right? Now, ever since then, though, the houses right away crept back up. The FHA boom hit, right? FHA, everybody's doing HUD homes. They went up. And today, I haven't seen one house less than $400,000 that was in good condition in Pomona. If I see one, it's really in bad shape. It's not doing good. But I'm not seeing the market go backwards.
No.
I'm seeing everything go forward. It's slowly. It might be creeping up slowly, but it's going up.
People say, real estate. Always invest in real estate.
Right.
And I believe that scenario for investing in real estate is one of the best tools to allow you to position yourself for a future investment. You get equity, you tap into your equity, buy another pad.
Right. Let that be a stepping stone.
Yeah, it's a stepping stone. And so when you do that, you create opportunities for yourself, for potential future to pay your child's education.
Right.
Right. And then you jump in on another one, and it starts to create a positive income. Mm-hmm. And now we're talking about using these real estate vehicles to help out with retirement. And that's really what you want to do. I mean, that's what I'm focusing on.
Right.
Because Social Security ain't gonna pay me nothing. What do they pay now?
We call it Social Security.
Yeah, they're gonna pay me at the end of the day, maybe like $3,000 a month.
Yeah, if that, because they got no money. They already said there's really no money, that some of us might not get it. That's why it's Social Security. Because, man, imagine. So people who are depending on that, what are they gonna do, man? Right? That's a tough one.
I think the government will come up with some other plan to print more money.
Dude, they'll always come up with a plan. Are you kidding me? They will always have a plan.
Oh, yeah.
The thing is that what's it going to be is how's it not going to benefit us again?
Yeah.
Because right now everything supposedly benefits us.
They'll go into $1 billion debt, man, to help the people, I mean, print more money.
Dude, they just said that we owed, I don't know how many trillions to China, right? We owe somebody like, I don't get into all that politics. But we owe them a crap load of money.
Yeah.
And then we go and we make a loan to the Ukraine for like, I don't know how many millions of dollars. And I'm like, man, if somebody owes me $1,000 and then I find out that you're over there giving away money to somebody else, I'll be like,
Where's my money?
Hey, bro, where's my money?
Yeah.
How could you be paying someone else and not be paying me? Pay up, sucker, you know? I ain't down with that,
man. The money, bro. The government.
But then that causes inflation, right? And then we're screwed. Then we're crying again, right?
It's a cycle.
Oh, it is a cycle, man. You know, like I always say, we're half of the country is always fighting with the other half because half of it wants blue, half of it wants red, and then because we can't have both in house, there's always one unhappy party, right? Always. That's gonna be always.
True.
So it's just we just have to find that happy medium and suck it up for the moment.
Yeah.
But meanwhile, let's hope that this market does something good. Hopefully, it'll help more people be able to buy. Where if it goes down, great. Interest rates stay low, that'd be great. If it helps a lot of us who want to invest more properties, invest in investment properties.
Yeah.
Hopefully that'll be a big plus, man. It'll happen.
Just a quick note, people. I mean, the reality is to be able to help your client move into a property and being able to help by knowing what you're doing.
Yeah.
Having the knowledge in the industry, not just knowing how to sell.
Right.
But having the knowledge to be able to align your people and tell your people what's going on with their situation. That's the key. Also caring about, the people, caring about your customers. I mean, if they feel that you're caring about them and you're showing them the proper way, you're going to get a ton of referrals. But if they feel like you're just out there for the money, then I feel sorry because you're not going to get those referrals. And you're going to keep struggling, just prospecting for more people. So that's my note for the day. I got to run, Mr. Molina and the team. But
I really appreciate it.
Thanks for the chat.
Thanks for coming down, man. I appreciate
absolutely.
you all the time.
Anytime, man.
And I just can't believe that you actually had a car made after you, man. That's amazing.
Oh, stop.
That's amazing, bro.
That's
just amazing.
Yeah.
All right, Mr. Gallardo. Gracias.
Hey.
I appreciate it.
Yeah, you're welcome, brother. Have a great day.